Right, welcome back to the Financial Blueprint. My name is Eric Hamilton, the president of Hamilton Sales Academy, as well as Hamilton Estates. Let me ask you a question. What if renting is costing you more than buying? What if you could afford a house today, but you may not know it? Well, today on the Financial Blueprint, we're going to dig into one of the key wealth building secrets that you can never think of. The question is being asked across the country. Is now the time to buy, or should I wait? That's all about this segment. And today, I brought an expert with me. So let me introduce you to Aubrey Pearson. He is a nationally renowned realtor, won a tremendous amount of awards, as you can see behind me. Aubrey, welcome to the show.
Thank you. Thank you for having me. I appreciate
Absolutely.
it. Thank you.
So, Aubrey, let's jump right into it because we've got a lot of things that we want to cover very quickly. So when we think about this, a lot of people ask the basic question. They really want to understand, right, what's the number one mistake that rookies make when they're trying to buy their home?
The number one, that's a tough one. And I say that's a tough one because it can apply to so many different people in so many different ways. One of the key mistakes that people make is they try to overbuy. They almost overthink it. And they think about the home as if it's going to be that absolute forever home. And statistics show us that it's rare that that's your forever home. It's probably 5 to 7 years, maybe even 10 in some cases.
Yeah.
So they go and they try to look for the home that checks all of these boxes, you know, porte-cochere garage and spiral staircase. And they want to make sure that they have the extended patio. And they're not thinking about that the value of this thing is going to continue to rise. Taxes are going to continue to increase in terms of property taxes going up. And what you can afford today, as long as you're continuing to expand in your career and go about things in a upward trajectory, but also prepping for those downfalls. So sometimes they just simply overbuy. In short, they overbuy. Yeah. Also, they just overthink it. Like I said, they'll overthink what a starter home is, what a starter home could look like. A really good starter home could be the gateway to you having a portfolio of the future, a future rental property, the value of that increasing and selling it for more and then using that for something else. So don't overthink it. Don't overbuy, you know, and don't think that this has to be your forever home. Think it through. So.
That's a great lesson. Another thing that I hear quite often is this 20% down.
Yeah.
I don't have 20% down. Do I have to put 20% down, or is that a myth?
That's a myth. There are options. There are options when buying a home. You have what's known as FHA. I'm sure we'll talk about. FHA is a government-backed loan, 3.5% down. That 20% down is your conventional financing. That is 20% conventional financing. And I won't go too deep into the weeds, but that'll help you avoid private mortgage insurance, what you hear is PMI. But you can get a home with 5% down, 3.5% down, 10% down. Some scenarios, 100% down if you're VA or qualify for one of those home types. There are down payment assistance programs to help give you money towards down payment assistance. There's buying in certain areas that have programs. So that is a myth. That is a myth. You don't have to have 20% down.
Is now a good time to buy, or should I wait?
This is a great time to buy. This market volatility is a buyer's market. This is the time. Take advantage of a buyer's market. Don't be fooled when they're telling you about all the volatility. They're thinking on behalf of the seller. Real estate contracts are written for the seller. Real estate is thinking about the seller. So while you have the opportunity to have a seller give you closing costs and give you $40,000, $30,000, $20,000, $50,000 off on a home, leave their furniture behind for you, whatever we can negotiate. It's going to be up to the individual situation. All situations are different, but this is a great time to buy. Be mindful. If those rates start to go back down, sidebar of this, COVID was an anomaly. That is not the normal rates. Look at history. History will tell you where things have done and where we're going in a lot of cases. Look at the history. That was an anomaly. But when those rates start to go back down, guess what? Those prices tend to go back up. Sure. So take advantage of this time. You can always, there's a little cliche that they say, you date the rate, you marry the home. So just date the rate. You can refinance later. We can figure that part out later. But you oftentimes are getting many incentives right now in a buyer's market. The volatility, they want to keep the market going. Take full advantage of that as a buyer.
I love it. Now let's talk about different mortgage options. You touched on one with FHA. But a lot of people I talk to, when they say they can't afford the home, they really don't understand the mortgage process. So you touched on FHA very quickly. What is an FHA again?
An FHA is a government-backed loan. So that's a loan in which the government kicks in and says, okay, to put down 3.5%. So again, that traditional 20% that has always been talked about. The government has kicked in and said, okay, you can put down 3.5%, and it's a government-backed loan in simple terms without getting too deep in the weeds about
Absolutely.
that. Yeah.
How about a conventional? I hear a lot about conventional loans.
A conventional loan is a loan that is a little less restrictive. So I will touch on one more thing about that FHA since I just brought up the word restrictive. FHA loans have some restrictions when you're doing your inspections and when you're looking over certain things they want to make sure that you have in place, whether that's the roof being intact, the flooring being inside the home, windows being proper, working properly. A conventional loan will give you a little more flexibility. You can go into a home, the standard conventional loan is that 20% down. There are conventional loans where you can put down less, like I say 5%, 10%. I've even seen some 3% conventional loans, but they have a little more flexibility in what's required for the home to be considered a livable, loanable home.
Great insight. Lastly, fixed versus variable.
Yeah, that is regarding the interest rate. So a fixed interest rate says if it's 6% and it says it's 6% for the life of the loan, that rate stays at 6% for the life of the loan unless you refinance or make changes to that loan type. A variable interest rate is going to adjust. It will adjust with the market. It will adjust with what the Federal Reserve and what the bank loans are doing. So you may start off at a 6%. It may go up to an 8%. It may go down, back down slightly. So it's going to vary with the market itself. You're seeing nowadays a big trend when you go look at new construction called a 2-for-1 buy down, a 2-for-1 buy down rate. That is where for your first 2 years, your rate may be as low as 4.9% or something. The second year, it may go up to 5.25 or 5.5, and then year 3, it may go up to whatever the current market rate is at that time. So you have that's another form of a variable rate. Fixed rates stay the same throughout the life of the loan. Those variable rates will adjust, typically in rising and going up throughout the life of that loan.
Now, we've got a couple of audience questions that came in, so we always want to take some questions beforehand. The first question, can I really buy a home with less than perfect credit? And what does that actually mean?
Yeah, I was going to say, exactly. What does that mean, right? And so the answer is yes. You can buy a home with a 620 credit score or above in most cases, and there's some lenders who will lend on a 580 and above. What it means is that you're probably going to pay higher interest. You're probably going to have a higher interest rate. Sometimes you have to put a little more money down. You have to have some skin in the game, as they like to say. You're going to have to bring something else to the table. But the answer in short is yes. You can buy a home with less than perfect, what's considered perfect credit. If we're setting our standard at the 700s and above, you can absolutely get a home down into the 620s and above, and like I said, in some of those rare cases, even the 580 and above.
Yeah. The last question we got, you touched on, is this a buyer or seller's market?
We are sitting in the buyer's market right now.
Yeah.
We are knee deep in the buyer's market right now, and it's been great for people like myself. We have fun navigating this market. I mean, you don't get me wrong. You'll throw a rock and hit a realtor, and they'll scare you to death as well. I don't act like that. People in my industry don't scare people off as well. The media will scare you as well with what's going on. But those of us who really understand it, who work with a variety of different buyers and sellers and investors, and really expand out into this kind of market, we completely understand. This is a fun time. This is a fun time in real estate. You're getting things now at a great buyer's rate. So like I say, sitting in the buyer's market, and you're thinking about their future value. You're getting it down at a price that you probably wouldn't have before, and we don't expect things to always stay as volatile. We've seen things settle in, and when they settle in and those prices go back up, you're going to have that key word that everybody likes in real estate is equity. I love it. You're going to have equity.
I love it.
That's it.
Aubrey, how do people reach you if they have questions, comments, thoughts?
Absolutely. So I can be reached on all social media platforms at The Bespoke Realtor. So at The Bespoke Realtor, which is right here on the screen. You can also reach me. That's probably best. Let's just start there. That's probably best. So reach me at The Bespoke Realtor, and then we'll be able to schedule things from there.
It's fantastic. Folks, let's move into it. So thank you, Aubrey. Let's move into it. Here's our call to action. Number one, let's check your credit report. There's a site called annualcreditreport.com. You can pull all 3 of your credit reports and see your credit score one time for free. Start with the basics, folks. We have to know where we're at today to know where we're going. Number 2, start tracking your expenses, folks, so we can begin to build this thing out. And lastly, let's get educated on what we've talked about. Reach out to a lender, reach out to a realtor. Begin to get educated on what's out there and how this can help you and drive that. So if you have home equity or home ownership on your mind, this is the show for you. So as we walk through, just lastly, real quick, so we've come all the way to week 8, which is our home ownership and getting into real estate. Next week, we'll talk about tax planning essentials. So with that, my ask to you as always, keep building your blueprint. Have a great day.